Good morning, and welcome to yet another edition of Macro Now, set to be released every Monday morning. My name is Alexander Turro, Senior Market Strategist here at RJO Futures, where we're going to be contextualizing the rates of change of growth and inflation. So with that said, we'll start with the global currency space. Notwithstanding yesterday's price action, you saw the dollar ramp up 1.8% on the week last week after moving to bullish on a 15-day basis, but remaining bearish trend on a 90-day basis. You have the euro versus the US dollar correcting minus 1.8% last week, but remains bullish trend up 3.7% in the last 3 months. You have the yen correcting minus 1.0% versus the US dollar last week, and also remains bullish trend as well. The British pound, however, dropped minus 1.3% last week and is now teetering at neutral trend. You have the Canadian dollar falling minus 1.4% versus the dollar last week, but similar to the euro, remains bullish trend as well. Not surprising with this move in the US dollar that was perpetuating the fourth straight down week for the SPY. Similarly, we have the VIX, the vol-to-vol signal was signaling lower highs as it was breaking through trend of 26 with immediate term downside to about that 24 handle as well. Global equity beta similarly did not like this up move in the US dollar. You had textbook oversold signals in the Kospi, the Hang Seng, and the Taiwan, along with in Europe, France, Germany, and Spain, which all got smoked last week alongside US financials, and as well as the small cap index. If you want to look at the emerging markets, the MSCI fell minus 4.5% last week, but still is up 5.4% in the last 3 months. And just following up on global equities, you had Chinese equities just correcting minus 3.6% last week and up plus 8.1% in the last 3 months. And Spanish stocks just continuing to crash, down another 4.4% last week and minus 8.8% in the last 3 months. Moving across asset allocations here, you're looking at U.S. Treasuries, which fell, 10-year yield fell another minus 4 basis points last week to 0.65%. High yield spreads widened 47 basis points to plus 537 basis points over Treasuries. And not surprising, with this up move in the dollar, you did have something like in gold correcting minus 4.6% last week, but it's still up 5.5% the last 3 months. And commodities, the CRB index correcting minus 2.1% last week to not plus 9.6% in the last 3 months. Really isn't all that surprising considering the strong inverse correlations that you're seeing right now with the US dollar. Gold on a 15-day basis has an inverse correlation of minus 0.98 and minus 0.94 on a 90-day trending basis. You see that elevated as well in the relation with the SPY, minus 0.70 on a 15-day and minus 0.92 on a 90-day. And then again, looking at something like the CRB, minus 0.79 on a trending 90-day basis. So with that, that's all we have for you today. If you have any further questions or would like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head up out there.